What's up everybody, it's Cosma and welcome back to the channel. Today we're diving headfirst into the exciting world of Bitcoin. Whether you're just starting out or you've been dabbling in crypto for a while, understanding the different trading strategies is absolutely crucial if you want to succeed in this market. Now, I'm not talking about getting rich quick schemes. Those are about as reliable as a used car salesman in Vegas. We're going to break down 6 solid strategies that can help you make smarter, more calculated trades. We'll go over the basics, the risks, and everything in between. By the end of this video, you'll have a solid foundation for navigating the wild world of Bitcoin trading. Let's get started. All right, let's kick things off with spot trading. This is the most straightforward way to trade Bitcoin. Imagine walking into a store and buying something. That's spot trading. You're buying Bitcoin at the current market price, hoping to sell it later for a profit. Now, you're probably thinking, Cosma, that sounds way too simple. And you know what? It kind of is. But don't let that fool you. There's still money to be made with spot trading. The key is to buy low and sell high simple in theory, but it takes research, patience, and a bit of luck. Think of it like investing in real estate. You wouldn't just buy the first house you see, right? You do your research, compare prices, and wait for the right opportunity. Same goes for Bitcoin. Don't just jump on the bandwagon because everyone else is. Take your time, learn about the market, and find the right entry point. And remember, just like with real estate, timing is everything. You want to buy when the price is low and sell when it's high. There are tons of exchanges out there where you can trade Bitcoin, but some of the most popular ones are Binance, Coinbase, Kraken, and Bitstamp. These platforms act as intermediaries, connecting buyers and sellers, kind of like a digital marketplace for crypto. Now, spot trading isn't without its risks. The crypto market is notoriously volatile, and prices can swing wildly in a matter of hours. That's why it's important to start small, especially if you're new to this. Remember, you don't need to become a Bitcoin millionaire overnight. Take your time, learn the ropes, and don't invest more than you can afford to lose. Now, if you're the kind of person who thrives on adrenaline and loves a good challenge, then day trading might be your cup of tea. This strategy involves buying and selling Bitcoin within the same day, trying to capitalize on those short-term price fluctuations. Think of it like riding a roller coaster. You're in for a wild ride with lots of ups and downs. Day trading requires nerves of steel, lightning-fast reflexes, and a whole lot of caffeine. You'll be glued to your screen, analyzing charts and trying to predict the market's next move. One of the biggest advantages of day trading is the potential for quick profits. If you play your cards right, you can make a decent chunk of change in a short amount of time. However, and this is a big however, day trading is also incredibly risky. Remember that volatility we talked about earlier? Yeah, it's even more amplified in day trading. Prices can change in the blink of an eye. And if you're not careful, you could easily get burned. Another thing to keep in mind is that day trading requires a lot of time and dedication. You'll need to constantly monitor the market, analyze charts, and be ready to pull the trigger at a moment's notice. It's not something you can do casually while watching Netflix. If you're thinking about getting into day trading, make sure you have a solid understanding of technical analysis. This involves using charts and indicators to identify patterns and trends in the market. It's not an exact science, but it can give you an edge in predicting price movements. And just like with spot trading, start small and gradually increase your position size as you gain more experience. Remember, it's better to miss out on a potential trade than to lose your shirt, chasing after every little price movement. Now, let's say day trading sounds way too intense for you. You'd rather kick back, relax, and let your investments simmer for a bit. That's where swing trading comes in. This strategy involves holding on to Bitcoin for several days, weeks, or even months, aiming to profit from those bigger price swings. Think of it like surfing. You're paddling out, waiting for the perfect wave, and then riding it all the way to shore. Swing trading is all about identifying those long-term trends and riding them out for maximum profit. One of the biggest advantages of swing trading is that it's less time-consuming than day trading. You don't need to be glued to your screen 24/7. Instead, you can check in on your trades a couple of times a day or even less. However, swing trading still requires a good understanding of technical analysis. You'll need to be able to identify those key support and resistance levels, spot potential breakouts, and recognize when a trend is about to reverse. Another important aspect of swing trading is risk management. Even though you're holding on to your trades for longer, the market can still move against you. That's why it's crucial to set stop-loss orders to limit your potential losses. Now, one of the best things about swing trading is that it allows you to take advantage of those big market moves. Remember that time Bitcoin went from like $10,000 to almost $20,000 in a matter of weeks? Yeah, swing traders were having a field day. Of course, it's not always sunshine and rainbows. The market can be unpredictable, and even the most experienced swing traders can get caught on the wrong side of a trade. That's why it's important to have a plan, stick to your strategy, and never invest more than you can afford to lose. Now, things are about to get a little more complex. Futures trading isn't for the faint of heart. This strategy involves buying or selling contracts that give you the obligation to buy or sell Bitcoin at a predetermined price on a specific date in the future. Think of it like placing a bet on the future price of Bitcoin. You're basically saying, I think Bitcoin will be worth this much on this date, and then you put your money where your mouth is. Futures trading can be incredibly lucrative, but it's also incredibly risky. Why so risky? Well, it allows you to use something called leverage. Leverage is like borrowing money from the exchange to amplify your potential profits. Sounds great, right? Well, here's the catch. Leverage amplifies your losses too. If the market moves against you, you could end up losing way more than you initially invested. It's like playing poker with your entire life savings. Sure, you could win big, but you could also lose everything. Now, futures trading isn't just about gambling on the future price of Bitcoin. It can also be used for hedging. Hedging is like buying insurance for your investments. It helps you protect yourself from potential losses. For example, let's say you're a Bitcoin miner and you're worried about the price of Bitcoin dropping. You could sell Bitcoin futures contracts to hedge your bets. That way, if the price of Bitcoin does drop, your losses in the spot market would be offset by your gains in the futures market. But listen, I can't stress this enough. Futures trading is not for beginners. It's a complex and risky strategy that requires a deep understanding of the markets, risk management, and technical analysis. If you're just starting out, stick to spot trading or swing trading until you've gained more experience. All right, if futures trading sounded intense, then buckle up because margin trading takes things to a whole other level. This strategy involves borrowing funds from a broker to amplify your trading position. It's like leverage on steroids. Imagine this, you've got $1,000 to trade Bitcoin, but you want to open a position worth $10,000. With margin trading, you can do just that. You're essentially borrowing $9,000 from the exchange to increase your buying power. Now, you're probably thinking, Cosmo, this sounds amazing. Why would anyone trade without margin? Well, here's the thing, margin trading is like playing with fire. Sure, you can potentially make massive profits, but you can also get absolutely wrecked. Remember how leverage amplifies both profits and losses? Well, margin trading takes that to the extreme. If the market moves against you, even slightly, you could get hit with something called a margin call. A margin call is basically the exchange saying, hey, you owe us money. If you can't cover your losses, the exchange will automatically close your position, and you'll be left with whatever's left of your initial investment. So when should you consider margin trading? Honestly, unless you're a seasoned trader with nerves of steel and a deep understanding of risk management, I'd say steer clear. It's just too risky for most people. If you're absolutely dead set on trying margin trading, start small, use a reputable exchange, and have a solid exit strategy in place. And remember, never invest more than you can afford to lose. Seriously, I can't emphasize that enough. Now, let's say you love the idea of trading Bitcoin, but you don't have the time, energy, or desire to stare at charts all day. That's where automated trading bots come in. These bots are like your own personal trading assistants, executing trades on your behalf, based on preset strategies. Think of it like having a robot version of yourself trading Bitcoin 24/7. These bots can analyze market data, identify trading opportunities, and execute trades much faster than any human ever could. There are tons of different trading bots out there, each with its own set of features, strategies, and risk levels. Some bots use technical indicators to make trading decisions. while others rely on more complex algorithms. One of the biggest advantages of using trading bots is that they can take the emotion out of trading. We've all been there. You see Bitcoin pumping and you get caught up in the hype, only to buy at the top and watch your investment plummet. Bots don't have emotions. They follow their programming, executing trades based on logic and data. This can be a huge advantage, especially in volatile markets. However, it's important to remember that trading bots are not foolproof. They can make mistakes and they can't predict the future. Just because a bot has been profitable in the past doesn't guarantee it will continue to be profitable in the future. If you're thinking about using a trading bot, it's crucial to do your research. Choose a reputable provider and start with a small amount of capital. And just like with any other trading strategy, never invest more than you can afford to lose. So there you have it, 6 different Bitcoin trading strategies to up your crypto game. Whether you're a seasoned pro or just starting out, remember that knowledge is power in the world of trading. Do your research, understand the risks, and never invest more than you can afford to lose. Stay updated with the latest market news and trends because things move fast in the cryptoverse. And remember those secure platforms we talked about earlier like Coinbase, Binance, Kraken, and Bitfinex. Those are your trusted sidekicks on this journey. Now go out there, make smart trades, and as always, happy investing. Remember, trading Bitcoin involves risks, so always do your research and use risk management tools. Stay updated with market news and use secure platforms like Coinbase, Binance, Kraken, and Bitfinex. Happy trading!